Good morning.
Good morning, Mrs. Onifade. Thank you so much for joining us. We're honored by your presence.
Thank you. Thank you for having me. I wondered about the share. Can I share?
I
Oh,
am
I can.
certain you will be able to share. Yes, indeed.
Okay.
So, the plan was to go with Mrs. Salawu, take a few questions, and then come to your segment, if that's okay with you.
Yes, absolutely. Is it
Fantastic.
possible to, because I wondered if I could just present and my husband can share. He's one of the what do they call them? Speakers as well. Not today, but
Yes, indeed. We had him last month. We had the honor of his
yes, correct.
presence. Indeed.
Yes.
I'm certain that that could be arranged. Professor Salawu, is that okay if Mrs. Onifade speaks and her husband shares?
What's the question, ma'am?
So Mrs. Onifade wanted to speak whilst her husband did the sharing on her behalf. So we have a kind of a nice duo going. Is it okay to give him permission to share as well, please?
Yes, it's fine, ma'am. It's okay, ma'am.
Okay. So I'm assuming you'll arrange that for us?
Yes, that Mrs. Onifade should be able to share her screen, right?
So not from her particular machine, but her husband's machine. Is that okay, please?
Okay, our husband will share.
Yes,
Oh, yeah,
please.
I will request that our husband be made a panelist, but I need
Excellent.
the login details of our husband. Can she please quickly send it to me?
Okay. Presumably,
He's already he's already signed up, so he's registered and he's right there.
Is there?
Yes, it's on the Zoom.
Okay, okay, good.
okay. So, Mrs. Onifade, I don't know if you were here when we said we'd be starting in just a few minutes, please.
Yes.
Okay, fantastic.
Wonderful. Thank you.
So once more, good morning, ladies and gentlemen, distinguished guests. Thank you so much for taking time out of your very busy schedules to join us today for Season 2, Session 7 in the African Support Bureau for Entrepreneurship series. And ladies and gentlemen, we are going to get started in 2 minutes' time. So if you want to go and grab yourself a cup of tea or water, you have 2 minutes exactly. And for all of you, you can see our 2 distinguished guests today. You're in for a real treat. So 2 more minutes and then the plane will be taking off. And I'm Irene, your chairperson for today. And so, distinguished guests, thank you so much for your patience and for joining us once more. We're starting properly. Okay, recording in progress now. Thank you so much for joining us for Season 2, Session 7 in the African Support Bureau for Entrepreneurship series. We are honored today to be joined by Mr. Rasaku Salawu, who is Head of Investment Banking at Meristem Capital Limited, Lagos. He's going to be talking about funding your startup and how to approach investors and sponsors. And then Mrs. Buki Onifade, who is the Chief Operating Officer at Principium Technologies in California, will be also talking about funding your existing business. So by the end of today's webinar, we will have no excuses to be sitting on our hands if we haven't started. And if we have started, no excuses to stop growth. So ladies and gentlemen, it gives me great pleasure to welcome our honorable guests today. Thank you to both of you. We're going to start with Mr. Salawu. We tend to change things up a bit. Somebody would say ladies first, but you know, we're going to have the gentleman first and then the ladies. So permit me to just share a little bit about Mr. Salawu. I find that when we know something about a speaker, our ears are tuned even better. So Mr. Rasaki Salawu is an investment banker who is an Islamic finance enthusiast. He heads investment banking at Meristem, as we mentioned. Meristem are kindly hosting our webinar today as well. Mr. Salawu has been supporting small and medium-sized enterprises with business and financial advisory services for more than a decade. Mr. Salawu, I don't know how you do that. You look very young to me, but however, we'll discuss that a bit later. So Mr. Salawu holds a bachelor's and a master's degree in agricultural economics from the University of Ibadan, Nigeria. Professionally, he's an associate of the Chartered Institute of Stockbrokers and a CFA charter holder. Pretty amazing. He is the person who is goal-driven, focused, and resourceful, and always delivers quality output in good time. So not only is he efficient, he's also effective. With a significant passion for learning, he commits to lifelong learning through deep thinking and reading. He's a master at playing chess. I've just taken up that pursuit, and we look forward to learning from him. So we're going to hand the microphone over to you, Mr. Salawu. I'll turn off my camera, but we'll be here. If you have questions, ladies and gentlemen, please wait till the end, but you can pop your questions into the chat and we will address them. So over to you, Mr. Salawu, and thank you once more.
Thank you very much. Good morning, everyone. Just to confirm that you can hear me.
Yes, please, sir, we can.
All right. Thank you very much once again. It's a pleasure to be one of the speakers on today's program. I've been introduced. My name is Razak Salah from Meristem Capital Limited. I've been with Meristem for over a decade now. And within this period, I've been a research analyst before moving, to investment banking. At the investment banking side of things, I've advised on, a lot of transactions, mandates, both for small, medium enterprises as well as large corporates. Just to dive into the conversation for today, I will be sharing my screen. Hopefully, at the end of the day, we would have useful contributions and questions. Please confirm if you can see my screen.
Yes, sir, we can.
All right. So diving straight into the conversation for today, or before I do that, I must say I'm quite impressed with the African Support Bureau for Entrepreneurship. I was fortunate to join the last session, and I mean, I think what you are doing is very great. You're promoting entrepreneurship, which is something that, when I was in school, I didn't quite get an opportunity to learn entrepreneurship, right? So it's a good thing, and I think the listeners today are in the right place. So moving on straight to the topic of today, approach investors and sponsors, right? We do know, the importance that small, medium enterprises, have to the economy, in terms of, their importance when it comes to supporting economic growth, employment, and, more importantly, supporting innovation. And we know that without innovation, an economy cannot, be sustained in the long term. So here we are discussing startups, which is a critical, element of the economy. And more importantly, because we know the importance that, financing, how important financing is to, driving, startups, driving small and medium enterprises. That is why this particular topic is instructive. How, as a business owner, as an innovator, as someone who is trying to start up a business, how do you position yourself to be able to approach investors as well as sponsors in a way that guarantees, success at the end of the day? That is what I would attempt to discuss today. So by way of an introduction, there seems to be, a slight dichotomy between the term investors and sponsors, right? And when we're saying investors, what exactly are we trying to say, and how is that distinct and different from sponsors? Just to lay the ground, I would define investors as, partners that are providing capital in exchange for, some sort of future economic benefits in the business. It could be by way of investing equity into your business or providing some sort of debt capital, right? The bottom line is investors usually have an objective, or one of the objectives that investors would have in partnering with you as a business owner in your business is because they have some sort of return expectations on their investments, right? And for startups, the form of capital that, or one of the form of capitals that you would naturally gravitate towards is, you want to get equity investors in your business, right? So often you would have conversations around, the investor becoming a part owner of the business. On the other hand, I would define, or I would look at sponsors as people that you would typically approach for some sort of support, right? It could be, support in terms of funding or, partnerships. The end goal for sponsors, usually is not because they want to get some sort of financial return at the end of the partnership. Rather, they may provide, funding or resources in exchange for, marketing rights. They want to associate with your brand if what you are doing, resonates with them, or they want to promote your business, because they, share the vision which you are trying to push, right? So there's that dichotomy. Today's topic again is whether you are looking at sponsors or whether you're looking at investors, how do you approach this important set of partners, right? Of course, why are we even having this discussion? Funding is very critical to startups. You need funding to oil, the wheel of innovation and progress, right? So the way I have dimensioned the conversation today is to discuss along these lines. The first thing I'll be talking about is, which I feel is important, before you approach, your investors or sponsors, you need to first try to gain an understanding of, who are these potential investors, who are these potential sponsors, what are the underlying drivers, what are the things that are important to them, so that you're able to position your business opportunity accordingly. The second point, which we'll be discussing in a bit more detail, is, after you have identified your target audience of investors and sponsors, how do you build a very solid, strong business case, such that what you are offering to them, would appeal to them and elicit the kind of responses that you would desire. Of course, we would move quickly to how do you craft a compelling pitch? What are the critical elements that must be present in your pitch for you to have assurances of, a successful outcome at the end of the day? Of course, we would move to the importance of networking and relationship building, right, as one of the critical success factors for ensuring the success of your startup. And thought very briefly on rejections and feedback. More often than not, as a startup, you have this grand idea, this solution that, you feel and you strongly believe, would solve a real problem that you've identified. And sometimes, for whatever reasons, you approach your would-be partners, investors or sponsors, you pitch the idea. Sometimes it might not be because your idea is not solid. You may, face some sort of rejection. So how should you handle, rejections, and what sort of mindset should you approach these conversations with? And then lastly, in terms of approaching investors, if you are able to identify these investors, you've gone all the way to make your pitch and you're at the point of negotiation, what are some of the things that you should bear in mind, to ensure that you're able to successfully close out on the deal? So without much ado, I'll move to the first point, which is, on understanding your target audience. I don't know if you've read The Art of War, right? One of the things that stood out for me when I read that book, many years ago, is that if you understand your enemy, right? In this case, I'll tweak it. If you understand your target audience and you know yourself, right, you are assured of victory in as many battles as you have, right? So it's very critical that as you start your journey towards approaching investors and sponsors, you must, as a matter of fact, do, some intensive research on your would-be partners or sponsors. You must understand, you must do some sort of background studies. You want to check out what's their track record, what's their investment history. Do they have particular industry focus, right? What are some of the businesses that they've supported in the past? And what's where the underlying reason or rationale for them supporting those businesses? If you are able to, if you've done your homework very well, you are first able to, tone down your target audience to say, okay, yes, this person has provided some sort of support for other businesses, but my business does not match the kind of investment profile that would interest this investor. So you're able to tone down your list to a manageable number. And secondly, you're able to position yourself properly, right? If you understand exactly what would make them deal, right? Second point, still related to researching your investors or sponsors, is you want to, see how your own vision for your business aligns with the vision of the sponsor or investor that you're approaching. To the extent that you can see very clearly an alignment of visions, then your chances of successfully closing out a conversation with these investors or sponsors, would be materially increased. If the target sponsor or investor is an institution, for example, you want to be able to identify, who are the key decision makers in these entities. Maybe you want to read a bit about their background. What are the things that matters the most to these key decision makers, so that when you do have an opportunity to pitch your business ideas to them, you are hitting on the key points that matters to them. So first important point, you must do some bit of work before approaching your target investors and sponsors. And doing that bit of work involves, you doing your homework in form of research. Then still related to understanding your audience, you should take liberty to, extend your research to, finding out what are the preferences of these target investors. At what stage do they support businesses, right? Because we find out that you have different classes of investors with different focus. Some investors are very much interested in supporting businesses at the seed stage, right? At the point where it's still an idea that you are trying to develop into a minimum viable product. Some investors would support you at that point. Some other investors would say, well, I'm not interested at the idea phase. Once you have developed your business idea up to a minimum viable product, which is something that can be taken to market, then at that point you can come to me and I would offer, support, whether in form of financing or sponsorship. So you must, do your homework to understand this is my target list of investors. At what point would they naturally invest? And am I at that point, yet? Another thing to look out for is from a target list of investors, do they have specific sector focus, right? Or are they sector agnostic? You have some investors that it doesn't matter, just bring a great idea. It doesn't matter if it's in oil and gas, whether it's in, consumables, as long as it's a great idea, they would deal. While some will tell you we are sector focused. So you should do your homework so that you don't just shoot blank and then end up with a lot of rejections, Then it's also good to try to understand the return expectations of your investors. I mean, you're approaching, let's say Razak Salau is an institution, and we have our fund, which is tailored towards supporting small and medium enterprises, right? But we do have a return expectation of maybe 30% IRR. If no matter how good your idea is, if you bring it to me and the numbers are showing that your IRR is maybe sub 10, clearly you are not going to be able to make a deal with me. So it's good to in doing your homework, trying to prune down your numbers of target investors. For those that have specific, well spelled out return expectation, it's good to check what you have versus what the expectation is. I mean, so as to increase your chances of success. I already spoke to the risk tolerance bits. Some investors have different thresholds when it comes to risk tolerance. Some would say it doesn't matter, I have the firepower to withstand any risk. So even though your startup is still at the ideation phase, I don't mind throwing some funding behind you. Some would say no, our risk tolerance is not that much, so we'd only deal when you have a minimum viable product. Some would say, I mean, we would deal later after you have developed your minimum viable product and you've gained some sort of traction, maybe a year or two of operations. It is at that stage that we will be investing. So understanding your audience by looking at their track record, what sort of investments have they supported in the past, what are the underlying rationale for making those investments, helps you to position yourself appropriately and increases your chances of success when you do approach these investors. So that's the first point that I would like to make. You must understand your target audience of investors and sponsors. The second, which is also very, very important, is building a strong business case. I mean, your startup, for the most part, is a business enterprise, right? It's not a social it's not a social venture. At the end of the day, it all boils down to what are the numbers, right? So very important before you venture out to meet your investors or sponsors is that you should build a very strong business case, and that starts from your projections, your financial projections. Financial projections, you are looking at from the top line all the way down to the bottom line. What is your business model? what product or service are you rendering to your target customers, right? How do you make money? Is it by selling the service? Is it, you must be able to articulate how you make money, and then you must be able to drill that down into financial projection, right? So you must, as a matter of fact, before you approach investors, be able to present a realistic forecast of your expected revenue, typically over the next 3 to 5 years. And it's also good to, outline very clearly what your underlying assumptions are, because it is these assumptions that the investors will be critiquing, in arriving at their decision to proceed or not to proceed. Now, what I've seen in my experience is, sometimes business promoters, they come up with some, otherworldly projections that are not necessarily realistic, right? And when you begin to have conversations with investors who are usually very savvy, when they look at your numbers, they can almost tell if you are living in reality or you're just living in a bubble, right? So it's very important that your financial projections are done properly. The assumptions that builds up to your revenue, your assumptions align perfectly with your business model, and you have realistic numbers, right? More importantly, what is your strategy towards driving the projected numbers? All of this must be crystal clear if you want to increase your chances of success when you eventually approach investors and sponsors. Tied to revenue forecast, of course, you also must be able to realistically forecast what your expected expenses are. And for startups, it's very important to make sure that the expenses that you are budgeting for are realistic and are, tied to the business, right? Don't introduce, frivolous expenses. You're just starting out and you want to live the life of, the CEO of, an institution that has been around for 100 years. And that would not cut it, right? Investors are becoming, or they are more savvy, they are more savvy now. So you must come up with realistic revenue and expense forecast. You must be able to answer questions like, okay, so at what point is your business expected to break even? What is the critical mass that you must achieve before you turn into profits? You must be able to answer all of these questions, and you're only able to do that if you have done your homework very well in form of coming up with the financial projections. Related to the strong business case is, what is the scalability potential of your business? How scalable is your business? It's possible you have identified, a problem in your community, and yes, it's a real problem, and you have designed a solution that can address that problem. But by the time you start to project, you say, oh, you want to scale your business, you have come up with your expenditure plan to the next 3-5 years. You must be able to demonstrate, truly that this problem is not just localized to your community. It's a problem that, is widespread, and you must be able to demonstrate how your solution, your product or your service would address that problem. It's good practice if you are going to pitch to investors to have an idea of, your total addressable markets, right? And of that total addressable market, what portion of that is serviceable by your company or your opportunity, right? That begins to, contextualize your financial projections, right? So that's something important that we must bear in mind. You must also be able to show or demonstrate to your investors, how, the profitability margins would trend, as you scale up, right? Because it's not unusual that, as a startup, your expenses might, be higher than your revenue. It becomes a problem if you cannot show clearly how, you would achieve profitability in the next couple of years, quarters, or months, right? Then I already spoke to, the revenue streams. When you're coming up with your revenue forecast, you must be able to show us very clearly how that forecast ties with your business model. What are the primary revenue sources for your company? It's good if you can also show, how you're able to progress the business, diversify the revenue sources so that, it helps to make for a more sustainable business, and it provides assurances to your investors that they are investing in a business enterprise that would, last for long. What's your pricing strategy? Are you operating in a new market, or are you setting up your business in a market that already has some players? And how, if that's the case, how are you positioning yourself to be different from the rest? These are some of the elements that must be in your business case for it to be considered strong from the point of view of your sponsors or investors. Related to this is the question of how do you craft a compelling business pitch? And this is important because sometimes when you eventually have the opportunity to speak with, investors or sponsors, you might not have, a lot of time on your hands. So it's good that you have already, properly articulated your business opportunity as, concise as possible. You should be able to, when you meet an investor or sponsor, you should be able to tell them very quickly what your business is about, what problem are you solving, what solution have you developed in form of either a product or a service to address that problem. How are you different from the rest, from the competition? Because the natural question that would come if I were to be that investor is, okay, this problem that you have identified, how is it currently being addressed, right? Because that will be your, your competition for starters. Now, your solution that you're creating, how is it better than the alternative? You must be able to, wrap all of this into what, like an elevator pitch, what's your unique value proposition? When you have the opportunity to speak to, investors, if you've done your homework very well, you understand what is, critical to those investors. And so you're able to, come up with a pitch that is engaging and memorable to that particular investor or sponsor, such that you probably get a meeting invite to come discuss your pitch in more detail, right? You must also be able to show, what is the current market size and what is the growth potential of this your product or idea, right? Because remember, if you are looking to get investors into your business, particularly equity investors, these are people that would remain your partners for a long period of time, right? So you must be able to show them that they are investing not just for the opportunity now, but that the opportunity is big enough, for the investment to be worthwhile over a long period of time. If you've already gained some sort of traction, maybe you've developed a minimum viable product, if it's maybe like a tech idea, you've already done like a soft launch, and this is the level of traction that you've been able to get. That's also something that will be good to show to your investors and sponsors, so they know that this is an idea that is profitable, that is viable, and that is also acceptable by the market, because I mean, you already have, some traction, right? You must demonstrate that you understand the competition, right? What are the alternatives? How are you different from the alternative? If you have all of these ingredients put together in your pitch, you stand a higher chance of success. this slide is very related to what I've said earlier, so I'll just quickly breeze through it. Part of understanding your investor is you must understand, how do they view risk and reward, right? If you understand what they consider to be risk in presenting your business opportunity, you must demonstrate to them that you know what the risks are. And these are, the strategies you've put in place to mitigate the risk, right? And you must also be able to show that the reward in form of projected returns, are commensurate to the risk that the investor will be taking, right? So you must be able to balance risk versus reward from the perspective of the investor. It's also good because for a lot of investors, they are not necessarily planning to be your partner forever, particularly because you're a startup. At some point, they have plans to exit the business. So as part of your pitch, if you are working with professionals, it's also good to begin to itemize what the exit opportunities would be for these your investors, people that believe in your project, people that believe in your company at the startup phase. At what point are they going to be able to realize their investments? So all of this you can already work into your pitch from the get-go. Networking and relationship building, this is very, very important. I mean, we all know the saying that they say your net worth is related to your network. So as much as possible, when you're trying to approach investors and sponsors, it's good to leverage your existing connections, right? From your existing connections, don't be shy, be bold enough to ask for referrals, right? Because I mean, if I already know you, I believe in you enough to be able to introduce you to a potential investor. Leveraging on my credibility, they just might be willing to listen to you and support you, more than if you just came, from nowhere. So strategic referrals from people that are already in your network would help greatly. But again, you're able to secure that strategic referral if you've done your homework very well, right? Of course, I'm not going to, I can't overemphasize the importance of, social media, LinkedIn, and all the other platforms. If you have a viable opportunity, if you've put together a pitch deck, you can, reach out to some of these venture capital firms, angel investors. We can reach out to people on these professional networks, and to the extent that you've done your homework very well, you just might be able to start a useful conversation. Another important point to increase your chances of successfully closing out with investors and sponsors is to attend, industry events, conferences, and seminars that are related to your business area, right? These are areas that you should make it a practice, to attend. You just might find your investor, sitting with you at the table at some of these conferences and seminars. To the extent possible, you should also try to attend, pitch conversation competitions. There are events, there are competitions like, Lions Den, where people come to pitch their investment idea. You can watch, when you watch some of these, shows, you get a sense of, oh, how do investors, how do sponsors think, and you're able to, position yourself appropriately. And when you make these connections, it's also important to, as much as possible, follow up. When you've promised somebody, you met someone at an event and you said, oh, I have this business idea, I have this pitch deck, I'm going to send it to you at the end of the day. As much as possible, try to, follow through with your promises. Have consistent engagements with, the sponsors or investors in your network, even if they don't invest now, if you maintain the relationship and they can see over time that you are, making traction with your business, they may invest, they may be your, biggest investor in the next round of investment. Then moving on quickly to, how do you handle rejections and feedback? Because you will definitely get some, rejections and feedback, right? I would say the best thing to do is to go with a positive mindset. Even if somebody is not cutting you the check at the end of the day, as much as it's possible, try to get feedback from the interaction. Oh, you're not cutting the check now. How do you see the opportunity? What areas can I improve in? Get all of those feedback, use it to refine, your opportunity. And so that by the time you approach the next person, you stand a higher chance of success. Resilience is a critical characteristics or character that you must have as a business owner, particularly when you are starting up a business, right? Then just to wrap up the presentation, closing the deal. Imagine you're at the point where you've done your homework. You've done your homework in terms of identifying the investors. You've crafted your compelling, pitch. You've done your business case. It's solid. You've done a bit of networking. You're at the point where an investor has demonstrated sufficient interest, and you are just trying to negotiate the deal. I'm giving you X amount of money for, X percent of your business. How do you handle those negotiations, right? The first point that I have for you is that you should know your value as a business, right? You should have a clear cut, realistic understanding of what you are bringing to the table as a business. What's your value proposition? What's the revenue potential of a business? What's the growth potential? What strategies do you need to put in place to be able to make a success of a business? You should know your what's, right? And sometimes that involves, working with, advisors, financial advisors who, would help you with, coming up with a realistic estimate of what you are worth. So you should have that at the back of your mind before, or you should have that in hand before you go into a negotiation. Very important at the point of trying to close a deal, you should be prepared to compromise, right? Because I've seen cases where business owners, maybe startups, they're going into conversations and they have, to be quite honest, they have an over bloated view of what they are valued at. And when they get to the negotiation table, they're like, no, I think I'm worth $1 billion. So for your 100 million, I'm only willing to give 10%, and, because they are unable or unwilling to shift ground, they are unable to close a deal, right? So it's important that you know your worth, but you know the extent to which you are willing to compromise, right? Then you should have very active listening when you're at the negotiation desk. If you listen, very intently, you're able to get, okay, what is the most important thing, what's the thing that is most important to my would-be investor or sponsor, right? And you're able to, negotiate along those lines, making sure that at the end of the day, you arrive at, a win-win situation for yourself as well as for your partners. Again, it's very important, regardless of the outcome of your negotiations, relationship is key. Even if the person does not end up investing in you, right? If you deal very professionally, you have a strong business case, they just might be, the person that will refer you to your eventual investor. In terms of finalizing terms, please, as much as possible, get professional advice. Don't just, in deal it, oh, now I'm there, I want to close out on this deal. and they just give you an agreement and then you just sign away. To the extent possible, get professional advice, financial, legal advice, and be very transparent, right? Before investors eventually invest, there's usually due diligence, right? You have made some representations that, oh, this thing is there. This is the market. This is the level of traction I have. Make sure that you are transparent, right? If there are challenges, put it on the table, right? To the extent that you are transparent, it makes for a better and long-lasting relationship with your investors. So I would say on this note, I think I would pause here. Thank you very much for giving me the opportunity to speak at this very important session. Thank you.
Thank you so very much, Mr. Salawu. Ladies and gentlemen, could you join me in applauding Mr. Salawu for the very excellent lesson he's given us today? I don't even call it a lecture, because with a lecture you might listen and then go away, but this is a lesson of life that I believe for all of us who have startups or are thinking of having startups, we can take a lot out of it. And I believe many of us have followed and made notes. I'd also like to say, even if your startup is the startup of you as a person, everything Mr. Salawu has shared with us is applicable to ourselves as we seek to add value and as we seek to make impact. Mr. Salawu, thank you so much. I believe that we will have some questions, and because of our time, I'm just going to allow for a couple of questions. So I have a raised hand from Mr. Saludin. Mr. Saludin, please do go ahead. And please, could we give Mr. Saludin the microphone? Is it possible for us to give Mr. Saludin the microphone, please? Otherwise, Mr. Saludin, we have another hand, Evander Ikuchu, raised as well. Yes, Mr. Saludin, please go ahead.
Thank you very much. I would like to thank Mr. Salawu for a great presentation. It was a great insight, a well-presented and thought-provoking one for me. Thank you very much. God bless you greatly. Thank you. My questions, one is that as an emerging entrepreneur, I know the importance of perseverance, and you've re-emphasized it in your presentation. But my question is, at what point do one conclude that I should quit? At what point, if there is any point that one can conclude that I just have to quit? Maybe let me look at something else. That's number one. I think I picked this up from the last thing you said. You said once you seek for professional advice, and you came up with that at the point I was talking about pitching. Pitching, if you don't have the team already set up, you go there alone to present, and here you are in a dilemma in a way that you needed professional advice before you sign the dotted line. So are you saying that at that point one could try and tell them, please let me do some consultation before I go ahead? Is that what you mean at that point? Thank you. These are my questions. Thank you for the opportunity.
Hello, would you be okay to answer Mr. Saludin's question first before we move on to the next? Thank you.
All right, thank you. Thank you, Taufik. I think you asked two questions. The first one is, as an entrepreneur, at what point would I advise you to quit, right? I mean, I think that would depend on a number of factors, right? the first thing would be have you overestimated, the business potential that you have, right? Because, when I was speaking, I did mention that, you need to do a lot of homework before you eventually approach your investors. So it's possible that the reason you're having, lots of rejections, when you venture out is one, maybe the business idea that you have. Yes, there is a problem that you've identified, but that problem is localized, right? In terms of it's not something that is scalable, right? And by the time you go out to meet investors, it's also possible that what you're asking for, well, I want to raise X million dollars, for this particular business opportunity. And when they question your assumptions, if everything, is falling apart because the business in and of itself does not make sense, based on the feedback that you're receiving from the market, it just might make sense for you to, withdraw, go back, reassess, re-strategize, and then, come back to the market. I mean, if what I've described is your definition of quitting, then I would say, at the point where you have feedback, valuable feedback from the market, you've assessed the feedback, and based on the feedback that your solution is not the best for the time, right? Then it just might make sense to withdraw. Just to note, it's possible that you have a great idea, like very fantastic, great idea, but it's not the time yet for that particular solution, right? So it just might make sense to withdraw, reassess, and then relaunch, right? That's to the first question, and I hope I answered your question adequately. Then the second one on seeking professional advice, right? You're asking, at what point do you seek professional advice? Do you wait until you get to the point where a deal is put in front of you, you need to sign? Is that the point where you would say, hold on, I need to get advice? I would say, along the way, as you're having these engagements, as you're preparing your financial projections, even though you might not be able to afford, the services of, the large firms, because you're a startup. If you have a network, and if your network is, strong enough, you just might have people in your circles that are able to, help with, this is how you do your financials. You also have resources online, that you can go through to say, okay, how do I put together a pitch? You have that pitch, you sound out, people in your network, right? And to the extent that it makes sense, you can now go to the market. So along the way, from the start up until you get to the point where a deal is put before you, you should constantly be seeking advice. Now, in terms of signing a deal, right, it's not usually the way it works, based on my experience, is at the point of negotiation, you probably have like a draft term sheet from the would-be investor where they've itemized, these are the points, these are the investment terms. They're not going to put a gun to your head to sign, there on site. So you could use the intervening period to seek professional advice from people in your network. So, I have this deal, please advise me, right? What are the things to watch out for? And then they tell you, these are the landmines, ask for this. Yes, this is reasonable, this is not reasonable, before you eventually sign up to any investment, right? I don't know, I hope that answers your question, Taufik.
Mr. Salawu, that's a very comprehensive answer that you've given here to both questions. Thank you ever so much. And Mr. Taufik, I recognize that you might even want to continue the conversation, but for now, if I could pause all of us, and in terms of the questions, I realized there were some other questions, but because of our time, if we could please move on to our next speaker, and then at the end of both sessions, we will take some questions and some viewpoints from the audience. So Mr. Salawu, thank you ever so much. And I love the summary. Everybody can take away something about understanding who our audience is, whether we're business people or even working within a business, building a strong business case for the things we want to do, being able to handle rejections and feedback and build resilience, having a pitch that makes us stand out and positions us in a way that's effective, networking and building relationships. Mr. Salawu, I think that was, of course, so pivotal because the person who rejects you today might be your window on the world tomorrow and how to close the deal. So thank you ever so much. Gentlemen and ladies, I believe we're all going to be taking action on the basis of what we've heard. But before we do that and move on to our second speaker, I would like to welcome our newest joiners to the African Support Bureau for Entrepreneurship from Ladoke Akintola University of Technology. We have our coordinators online today. We have Professor Olusola Akande, who's the director of the Entrepreneurship Center there, Professor Akintunde Oyedukun, and Dr. Eunice Olawisun. We hope to hear from you at the end of the session. Thank you so very much for joining us. We really appreciate the fact that you've tied your cloth to ours, and we're going to be moving forward together. Also, with the organization supporting us and Meristem, we're going to give you a chance at the end to give us a closing remark. We would also like to acknowledge the presence of the Vice Chancellor of Fountain University, Professor Olayinka Ramoto Karim, and I believe there are other distinguished guests that we will mention in due course. So thank you. Please stay with us as we move on to our second speaker, who's taken time out of her busy schedule to join us today. So our second speaker is Mrs. Buki Onifade. And for those of you who were with us last month, we were treated to a wonderful session by her husband. And today we have Mrs. Onifade with us. Please bear with me. I'll just put my camera on. I didn't realize I was off camera for a few minutes. So Mrs. Onifade is a seasoned business coach and growth strategist with over 2 decades of experience. Again, I wonder how. Known for her transformative approach. She helps businesses from startups to scale-ups achieve sustainable success with an emphasis on sustainability there. Offering support in the teaching and delivering of key business processes of marketing and sales alongside powerful business coaching, Mrs. Onifade provides tailored solutions to accelerate business growth and has worked in a variety of roles as an entrepreneur, a coach, and mentor, including as a panel member for Waves Enterprise, part of the Ciroli Institute, International Enterprise Facilitation in Italy, Northwest Development Agency in Liverpool, UK, and as a business mentor for the Prince's Trust in UK, where she supported several businesses across a range of sectors. Mrs. Onifade is also accomplished in various aspects of life as well. She's a program project manager with a successful track record of managing technology initiatives. And you'll agree with me, technology is where we're all headed now in terms of focus and devotion. She's the COO of Principium Technology, as we mentioned at the start, a technology consulting business based in California in the United States of America. Mrs. Onifade, the microphone is yours, and thank you so much for taking the time to join us.
Thank you so much. Can everybody hear me? Thank you. Well, thank you, Dr. Irene. I do assure you I have age on my side here. So 2 decades is not a lot, you know.
Age and beauty it must be then.
Thank you. And thank you so much to ASBI for this opportunity to join you today and to speak to you and to all of
Sorry, Mrs. Onifade, we can't hear you. Dr. Solojo, can you hear Mrs. Onifade?
No, I can't.
Oh, I see. Shall we pause for a couple of minutes and see if perhaps she's having connectivity issues and can join us shortly? So we seem to have lost Mrs. Onifade. I believe she will rejoin us shortly. So let's give her a couple of minutes before we talk about what we might do, please. Ladies and gentlemen, I can assure you this was not planned, but as these things go with technology, we still have to deal with one or two hiccups as time goes on. So I wonder whether if we have our LAUTECH coordinators with us, whether they would like to bring us a quick greeting, please. And then we will hopefully have Mrs. Onifade back with us. So do we have Professor Akande with us? And are we able to give Professor Akande the microphone, please? Professor Akande, over to you, please, if you'd like to say hello to everybody on the call.
Yes, we have Professor Akande with us, and I think she should be able to give a kind of speech shortly. Can we give Professor Akande, Olushola Akande? Please give Olushola Akande the microphone, please.
I noticed she's a panelist, so hopefully she can pick up and say something to us. Professor Akande, can you hear us? Okay, how about Professor Oyedukon? Do we have Professor Oyedukon with us? Ah, okay. Yes, please. Professor Oyedukon, over to you, please. You can unmute and say hello to everyone.
Good morning, good afternoon, everybody.
Good afternoon, sir. Welcome.
Thank you for this beautiful and wonderful, insightful, educative, and result-oriented speech given by our honorable guest. We are happy for this procedure. It's quite interesting, and you can see that it's all engaging, and it requires a lot of deep thought. It's a wonderful presentation, and I hope we can, from this way going forward, we should be able to take the advantages, looking at it from the positive part of it, especially in this part of our community where access to fund is pretty difficult, and sometimes even when you have the opportunity to do that, the skills to actually embark on such opportunities are scarce. And this has been very, very well detailed. Thank you, the organizers. Thank you, people that are also supporting the organization of this. We bless, God will bless us all.
Mrs.
I'm going
Mrs.
forward
Onifade
with
is back.
Thank you
going
so
forward.
much.
Thank you so much.
Yeah, Mrs. Onifade, I think you are back.
Thank you, Professor Oyedukun. Thank you. And Professor Solojo, I'm so sorry. Did you mention that Mrs. Onifade was back with us? Okay, I might have misheard. Ladies and gentlemen, whilst we hopefully try and resolve our challenge at the moment, I would like to take this opportunity to mention to you something that's being hosted by Obafemi Awolowo University, Ife, Nigeria. And so the Institute for Entrepreneurship and Development Studies is hosting their annual international conference, and they are inviting a submission of abstracts from now until the 30th of September 2024. So the theme of the conference is Advancing Entrepreneurship Education and Practice for Sustainable Development in Africa. So if you are interested, please, by all means, link up with us here in ASBE, and we will be very happy to provide further detail. If you wanted to submit a paper, you could do so. There's an email for submission that we will share with you. And so, ladies and gentlemen, they are interested in topics like entrepreneurship and intra-African trade, entrepreneurship policy frameworks and initiatives, the digital economy, teens, youth and women entrepreneurship, the circular economy and entrepreneurship education research and impact assessment. So this is going to be taking place from Wednesday the 6th to Friday the 8th of November 2024, and you are all cordially invited. So this is the IFEDS 2024 Annual International Conference. Okay, so ladies and gentlemen, bear with me 1 second and we will see if we can resolve what we're facing in terms of our challenge.
Okay, can you hear me?
Yes, we can hear
as
you,
if right on cue, Mrs. Onifade. Thank you so much for rejoining us.
I do apologize. I'm actually traveling, so I lost signal. I'm back now, although it says the host stopped my video, but I'll keep going so that we can, because time is quickly moving. So, okay, looks like I can do my video now. Anyway, I'll move on. And I think as well, we're just going to see if my husband can share again, because I'll keep talking in the meantime. So thank you again. And let me just start so that we can get going. So funding existing businesses is my portion of this talk this morning. As I said before, there's a lot of synergy with what has been spoken earlier with Mr. Salau. So I'm just going to come at it at maybe a slightly different angle, particularly because I'm talking about funding existing businesses as well. I might add a few things that was not, there we are. I might add a few things in addition to what you need to do to to get funding for your business. So I have been introduced. So briefly, I'll just say I'm a business coach, business consultant, COO of Principium Technology, where we work with businesses to assess their needs, including technology. We are a technology company, but not just that. We help businesses with their turnaround and introduce any kind of technologies that they might need to improve, to grow, and to scale their businesses. So I've been doing that for several years, even before Principium. So that is what I come to you with today. This idea. of working with and supporting businesses. Okay, so the slide will come on shortly, but we're talking about funding existing businesses. So let's talk about starting that. Nigeria, as we know, is an interesting landscape. It's a unique landscape for existing businesses seeking funding. There are several considerations that impact the ability to raise funds. Some of those include a stable currency, foreign exchange rates, and uneven economy, and a restrictive regulatory environment. So some of those are the challenges that we face when we're trying to raise funds in Nigeria. And while the challenges are significant, there are still opportunities for raising funds. They say that cash flow is king. So entrepreneurs who have the ability and desire to establish a business, they work tirelessly to bring their business ideas to life and reap the profits. But to be successful as an entrepreneur, you must possess several skills. And a key one is the ability to maintain good cash flow, to grow and sustain the business, making proper funding vital to expanding the business. The question is your business ready for expansion? We have learned about the kind of expansion or what you need when you start a business, but is your business ready for expansion? A scalable business usually has a strong and flexible business plan. It has a clear need for the goods or services that it's offering and the ability to grow its operations. Along with a strategic plan for handling growth, having scalable technology and processes in place can be an indicator that your business is ready to grow and you need to seek out investment. I say that because it's important to be aware of where your business is. Are you still in the startup phase and need to consolidate on that, or are you ready to scale and grow your business, in which case you are looking for additional investment? So we're going to talk a bit about funding your existing business. So I'm talking to an audience that already have started their business. So this is looking at what it is that you can do to grow your business. Obviously, if you have identified that you are currently in that position. Investors are a critical component in the growth and success of any business. They bring in the necessary funding and resources to help your business thrive or to help a startup thrive, because you're now moving into the scale-up. And they also provide valuable experience, expertise, and network that can help scale and grow an existing business. It is so important to be aware of those words, the valuable experience, the expertise, and network, because working with an investor is not just about the money. But investors are more likely to invest in a business that has already shown success. This is partly because in an existing business, the investor gets your existing clientele, your customer base, an established supply chain, access to your staff, and proven internal processes. So they get financial reward in growth and a greater likelihood of success. This is why you're attractive. But being able to show revenue or growth in your customer base that your business has achieved would demonstrate to potential investors that your business is already performing well and has a proven track record. And it will allow them to skip the complex and often difficult aspects of building a company from scratch. So when they're looking for investments, it is important. When they're looking for investments, these are the kind of things they're looking for: some kind of track record, and an existing business can provide that. Now, when you are looking for investment as a business, it is important to consider how it will affect your control. Getting partners can help you to get the money you need, but they will also have some say in your business. You're likely to cede some of that control to your investment partner or partners. But getting the right investors can make all the difference for the future of your business. I'm just going to reiterate, if you're looking for funding, it's important to know that you are at that stage of your business and you have some of the resources that you need to scale the business before you even start looking for an investor. Having done all that, then let us look at some of the options that are available, some of the funding options that are available for existing businesses. So depending on your business need, you can approach different people or different groups for your investments. You can approach venture capitalists, angel investors, or even bank loans. Some of the ways that you can access funds for your business is bootstrapping. Bootstrapping is funding your business with your own funds and or from personal sources such as family and friends. So in this case, we're not talking of external investment sources, outside of maybe your family and your friends, but it's another way, it's a very popular way employed by businesses to fund their business. It can be challenging when it comes to scaling because you don't have that large amount of money at your disposal. You can also approach angel investors. This involves seeking out high net worth individuals who are looking to invest in the next big thing or have an interest in supporting certain businesses. You can look for venture capital, firms that have a focus on emerging markets, maybe in Africa and other countries. Crowdfunding. Now, while crowdfunding is still in its nascent stages in Nigeria, if done properly, this is a popular method as well of raising funds for an existing business. Then you have government grants and loans. This can be used, or these vary and can be used in particular industries, perhaps such as agriculture, or for certain demographics such as women or youth. And then you can also go to development finance institutions. So you'll be looking at the likes of the Bank of Industry and Bank of Agriculture. So these are more established organizations that you can approach when you're looking to raise funding for your business. Let's look at how to prepare for investment. So you've decided, or you feel that your business is at that stage, it's running, and you feel that it is now a time when you want to seek out additional funds from investors. The first thing I would say is that you should network. This was also referred to earlier. Why do we need to network? It's because it's hard. We talk about finding investors, but where do you find them? They can be hard to track down, but finding them and then looking to build relationships is quite important. Most investors will only back businesses if they've discovered them through personal referrals. So you might not just find them on the internet doing a Google search and looking for an investor. You can find some information, but you have to find a way to build relationship and build connections with people who know them. You can ask other entrepreneurs, maybe ask somebody that you know who's raised funds, raised some financing. That could be an option. Ask any advisors that you might have, such as an accountant or lawyer. They might be privy to such information. The best way to attract a potential investor is to find someone who can help make a warm introduction. And then when contacting an investor, make sure to clearly explain what makes your business unique and different from others in the market. Mr. Salau mentioned Lion's Den earlier. You can see that the people on the panel can be quite ferocious, which means they haven't got time. So it's important that when you're contacting them, contacting investors, you make sure that you're communicating clearly and concisely what it is about your business that is unique and different, and what it is that is interesting enough for them to even listen to you. Let's not talk about investing in you. So it'll help them see the value that you have. Keep your pitch simple and easy to understand, and focus on what makes your business stand out. You want them to be excited about your business and want to be part of it. Show that you have conducted market research and understand your product market fit. We'll talk about that in a second, because investors are not going to gamble on just a good idea. They want to see your business potential or your growth trajectory. So you need to convey to them that your product or your service stands out and demonstrates the problem that you are solving or the need that you are meeting. Be transparent and honest about the state of your business, the challenges you're facing, and how you plan to overcome them. Don't try and create something that is not quite right. Okay, so this is the point where I would advise you to put yourself in the shoes of an investor. The previous slide, please. In the shoes of an investor, because nobody wants to give money to someone who may pose a risk or to getting a return on their investment. Secondly, research. It's a good idea to research potential investors in order to understand their background and which businesses they've previously invested in, so that you can ensure that you and them will be a good match. Acknowledge that all investors are different. In the same way that clients and startups are different, all investors are different. They prioritize different issues. So one of the crucial aspects of building a successful enterprise is attracting investors who believe in your vision and are willing to provide the necessary funding. So you need to target those who are more likely to be interested in what you are offering or what you are providing. So when you know the criteria that they use to making investment decisions, then it is a lot easier for you to be able to get an opportunity to talk to them about your needs. Because investors have various reasons for why they're providing funding, and varying expectations for their involvement in the business. Every investor is different. The time that they want to put into your business, some of them don't want to have hands-on involvement with the business, but some people want hands-on. So you need to know the investor that you are looking to partner with. You need to think about what industry they prefer, because some of them work in particular industries. They know how it works, so it's easy for them to make an investment decision and work with you. Say, for instance, you're in agriculture, and this is an investor that has historically invested in agriculture, then you're more likely to be a good fit. Familiarity for them is quite important. So if there's something that they know well, then they're more likely to go with you. Then this one, create an investor profile. The reason I'm saying this, again, is to do with this idea of having a fit with the investor that you're seeking to work with. And let me say that when I use the word investor profile, I'm not necessarily just talking about an individual like an angel investor. I'm also talking about sometimes when you go to a company and a financial institution, there's some of them that are skewed towards certain industries. So you still need to have that kind of fit. And there's still some questions that are applicable that you need to have answers to before you go to them. So for instance, an investor might be asking to themselves about your project or your business that you come to them with. They might be asking, is the timing right for this? Based on my current situation and based on the business strategy for exit, is this going to work? Is it a good time? Do the books look right? Do your financials, we're going to talk a bit about that as well. Does your financial give me the sense, as an investor, does it give me the sense of how viable and financially sound your business is? Does the company have a good reputation within the community in which it operates? Because you're an existing business, so you need to have some kind of track record in the community such that people can say, oh yeah, this business is doing this and that. because of a poor reputation in the community is something that an investor doesn't want to come and manage. Is the company profitable and will it scale? Right. Most people will buy a business in the hopes of growing it into something more or buy into a business. So if that's the case for your investor, they will want to take a close look at the company's potential for growth. Is there a good management team to run the business? So when you are creating this investor profile, you're answering these questions and then you're looking at it and thinking, okay, so this is the kind of investor that I'm likely to be able to work with. By understanding the investor, you have a better chance of securing the investment. So let's look at some of what I would call requirements for investment. Now, there are different requirements depending on where you seek your investments, but you can reduce the time that it takes to apply by doing certain things. One of them is this. You need to know your product and your market. So earlier, I think either I mentioned or the previous speaker talked about product market fit. As a business owner, you must understand your product and the market. Do you have a product market fit? So product market fit is described as finding a good market with the products capable of satisfying that market. It describes a scenario in which the company's target customers are buying, using, and telling others about the company's product in numbers, large enough to sustain that product's growth and profitability. And this is achieved by knowing that your product can serve a solution to your target audience. You must constantly evolve with your customers and periodically evaluate their needs. You gain more knowledge and experience resolving their needs. So those are some of the ways that you can have a better product market fit. Investors generally demand evidence of product market fit to consider investing. So know your product and know your market. Know your numbers, so important, know your numbers. You have to be able to understand and fully explain your financial model and the assumptions driving the model and its viability. You need to show that your idea has an excellent and distinct differentiator. Because investors want to see that you have a clear vision for your business and a plan of how to execute it. So in that would be detailed financial projections, market research, and competitive analysis in your business plan. You have to demonstrate that you're ambitious, but you're also realistic. So you show investors when they're projected to make their investment back. That's so important. They need to know, if I put my money into this business, into this expansion of your business, your existing business, when am I going to make my money back? Or even if I don't make it right away, what are the kind of dividends that I should be expecting with my money? I want to make my money work for me. That's what I am as an investor. So you need to be able to prove that. Now, it might be difficult to accurately project your gains, say, 10 years into the future. It's not terribly difficult, but if you can't do that, you have to at least show or demonstrate the growth potential that is there, and then back it up with a financially viable business model. So the more time you spend perfecting your financial projections, the more comfortable the investor will be about getting on board. Secondly, you need to know your team. Investors are not just investing in your business, they're investing in you and your team. I have heard investors talk about the business might sound like a great idea, the figures are right, but they cannot invest because they cannot work with the person or with the team. They cannot work with the person maybe because they are not teachable, they don't listen, they prefer to do things their own way. Now, this is an investor that is coming with some money and some experience, but the entrepreneur feels that they know better. So they won't invest. So they're investing in you and your team. So it's essential for you yourself as a founder to be in the position where you're able to take on an investor. Remember, I said earlier on, before you start the process of trying to get investment, you have to think, is this something I could do? Can I cede control of my business to somebody else before you start looking for money? Also, having a co-founder, directors, and management team can be particularly beneficial in this regard. I think the earlier gentleman that had a question was saying something about having a team of advisors. I think it's important to, especially when you are positioning yourself for investment, to go about it not by yourself. You should have a team, whether they're people that you work with on the business or advisors like your lawyers and accountants and so on and so forth, because this gives the investor a bit more confidence in what you're doing. It's not just you with your one business that you're looking for ₦1 million or 5 investment. So your team. So you have to build a great team. So for example, if you had a co-founder who had a finance background, and maybe your background is in tech, or a co-founder who was good with public speaking, and you're maybe the back-end person, seeing an investor, seeing the two of you or three of you, or however many, complementing one another with your skills is another reason for them to feel confident. So they want to see a passionate and determined management team with the skills and experience to make the business a success. If your team lacks some of these necessary skills and experience, it's worth addressing it before you go pitching to investors. It might be time to recruit somebody or find external advisors or mentors with a relevant background. Okay, so that's requirements, what I feel that you need before you even go for the investment. So let's now jump into the actual seeking investment. And I'm just going to tell you a couple of tools that I think you might need as you do this. Before I do that, I would say to you that if you know that you don't have the skill set or the experience at the time when you want to start looking for investment, I would suggest that you find some help, solicit, beg your pardon, some help, somebody who can help you put together, whether it's a pitch deck, a business plan, or help you create your brand story before you go out and seek. And there are many ways to be able to polish up your storytelling, which I can refer to as well in a minute. But I would suggest that you think about that as looking at the possibility of getting professional help before you go out and do all of this. So the first thing I just want to talk about is the idea of storytelling. This is how you show your company's growth through the story context. And why stories? I know we're talking about numbers, those are very important, and the numbers will be there in the story. But story is a way for you to engage with people. Remember, investors are people too. So being able to connect with them on a level beyond the numbers is a brilliant way to start your search for investment. So showing your company's growth, being able to create a story encourages people to investigate the background behind the growth. I'm sure you can think in your mind, or maybe you've read about it, some businesses, some interesting businesses, and you discover how they started. You discover their origin story, and you're like, oh wow, that's amazing, the way they overcame challenges and so on and so forth to be able to get where they are now. And that endears definitely endears your clients to you, but you can also endear investors to you. You can endear people to you that will say, oh, wow, I love what that person is doing. I would love to support them in their journey. So you can elevate the story by enriching it with a narrative that will be memorable to investors. Use the story of your business, how you started, what you overcame, to create an emotional connection with the audience. Tell them how the idea came about. I know of people who start up a business because something happened that was so significant to them. They wanted to create an enterprise around that, and they were successful in it because they were driven. They had a passion for what they were doing, and regardless of what challenges come, as they do, they were able to overcome them because they were so passionate. So that's a great story, and the storytelling can be not just when you are talking to an investor, but it can be in every opportunity that you have. For instance, we go to some organizations that set up some networking events. One of them is like a tech pitch, and you're given the opportunity to talk about your project or your business, but you tell the story about it, and then you have people in the room who are actually potential investors. In fact, that's why they set it up, so that you can tell them what you're doing, how you are helping, what needs you are solving, or problems you're solving, beg your pardon, what needs you're meeting, and they're taken along with your story, and they're like, yeah, that's where I want to put my money. You can get potential investors there. So that's something I would encourage you to look into, because there's a lot of words that we're throwing out to you today, but the reality of it, the practical application of it, is that you need to get out there and find these opportunities so that you can start to talk about your business. First of all, obviously, create your story, your narrative, and then you can go out there and you can be talking. But don't forget the numbers. Don't forget the numbers. Investors make decisions based on data. So you have to demonstrate your key numerical indicators. You have to emphasize some financial stability, growth potential, and certainly return on investment. The clearer and more convincing your numbers are, the easier it will be to gain the trust of investors. I'm not going to talk too much about the pitch deck because it was referred to earlier on, but the pitch deck is essentially a shortened version of your business plan. It's like a slide presentation, and it just gives information, concise information about your product, your team, your business model, and your key financial data. But it needs to be clear, it needs to be compelling so that it's exciting and engaging to the investor. Personalize your pitch. We talked earlier about doing research, creating an investor profile. Know who you are talking to. Don't create one pitch for everybody because they're not the same. So personalize it. Make sure that you also include information on your target market, your competitive landscape, and so on and so forth. So something visual is another way, again, to connect with investors. But even with the visual, remember, we're still talking about financials, because at the end of the day, that's what the investor is looking for. Nobody's going to give you money just for beautiful words or pictures. So the finances have to be there. But you can present the project achievements, whatever you've attained in your business. You can present that in a visual form, with information, with infographics, with images, and so on and so forth. Something else you can do is you can highlight through that achieved results. Some of this you can't really do as well on a business plan. It's just words. But this one you can have graphs and images. Successful partnerships, perhaps you've worked with some organizations, perhaps you're helping some organizations. Those kind of things can go into your pitch deck, because what it does is that it shows you your journey. It shows the investor, beg your pardon, your journey, and they can see themselves in it as well. Okay, so I'm going to leave that one there. But some of the things that you need to understand in the pitch deck is to know who you're pitching to, the audience, have your unique proposition, what is important to you. If you're a charity, a nonprofit, and you're working with, I don't know, women in impoverished communities or such, you must show that, present that. That's something that makes you different, something that makes you unique. But it must have structure and it must be clear. So the storytelling, the pitch deck, and the business plan, they're all tools that you can use for different purposes and different investors. There's another thing that we go to. They do something that's similar to a pitch deck. And this is one where you have coffee and donuts, and then somebody stands up there and talks about their business, talks about what they're doing, and then they ask the group, the people in the meeting, for some feedback. So that's something else that I would encourage you to do, is to find platforms where you can speak about what you're doing. They can help you refine it a little bit, get some feedback of what should be there, what shouldn't be there, this didn't work for me, and so on and so forth. But again, in those kind of environments, you will find potential for your investors, if not the investors themselves, but they will go out and talk to others about what you were doing. I don't want you to think that investors are just faithless people out there, and you have to just be searching all over the internet or wherever. Look at every opportunity as the opportunity to pitch your business. You're doing great work, you're solving a problem, you're meeting a need, and you want to scale your business, your existing business, then speak about it. Talk to people about it. Talk to people in these kind of organized environments, but then talk to others as well, as much as you can. Be pitching, pitching, pitching. And then finally, you've got your business plan. I'm sure many of you wrote a business plan at the start of your business, but when it comes to investing, this is so crucial. A strong business plan is a crucial requirement for getting investment, particularly if you're going to a bank or a venture capitalist or any other financial institution. You have to have a strong, solid business plan, which includes things like your business objectives, your skills and experience, your market, the customers, your competition. If you remember your SWOT and all of those kind of things that are in the business plan, your sales and marketing. What is your plan? How do you attract customers? How have you been attracting customers? What are your sales channels? What are you using? What kind of pricing strategy do you employ? And what is your marketing like, social media marketing and so on and so forth, online advertising, all of these kind of things. Very key as well, your operations. What's your operations like? What is your staff like? What kind of training do you have for them? If you do have any staff, which you should do if you're ready to scale. And then your financials. What is the revenue that you're currently making? And what will you need in the future? You have to have a sense of what you need. Guys, if you're going to go ask for money, you have to know what it is that you need the money for. Because I think what often we do is we are in this space of, oh, I need money. I would only succeed if I have the money. Remember that growing your business is not just about the money. Having valuable expertise, having mentors, which can be free, having other people that just come and support you is so important, so that when you actually do need real money, you know exactly what it's for and what you're going to do with it. It's got to be specific. Otherwise, just throwing spaghetti on the wall and hoping it will stick. So financials, I think that's probably the thing that I would just want to reiterate over and over again. Know your numbers, and be able to speak about your numbers, because that's what the investor is thinking about. Again, when you get to this stage, you need to know that if you can't do it yourself, consider getting professional help to create them before you go in front of the investor. So thank you for taking the time to listen to this presentation. I hope you have gained some value from it. Feel free to contact us. I think, yep, it's on there. Our email and our website is shown there. You can also contact me through my LinkedIn profile. It's just LinkedIn/Bukionifade. But once again, thank you so much for your time. And contact me, contact us and the organization or the company, beg your pardon, with any further questions that you may not be able to get through on today. Thank you, Dr. Irene.
Thank you so much, Mrs. Onifade. Fantastic lesson again, telling us about serious business and getting forward with what it is we've got to do. Thank you for giving us a different perspective to some of what Mr. Salawu said and highlighting the importance of things like our business plans and how we would really need to go beyond just money, but you've also really emphasized the importance of money. And I think many people have said our record keeping is sometimes what works against us and we're not really ready. So talking to us about being ready is really important because sometimes we think we need money, but we're not really ready for any investor. I remember having a conversation with someone and I just said to him, I'd like to invest in your farm. And by the time I'd asked about his business model, I knew he wasn't even in a place where he was making any profit that he could then take my money and give me a return on. So these are some of the things, the realities we have to face. Ladies and gentlemen, I'm going to just hand the microphone over to Professor Dapo for comments and questions to Mrs. Onifade, and then I'll hand over to Professor Sola Ojo. And please, if you do have any questions, please pop them in the chat because we're a little short of time, so we might have to get our speakers to get back to you. So Professor Dapo, could you go first, please, sir?
Thank you very much to our presenters. Thank you so much, Mrs. Onifade, for the wonderful presentation that you've provided to us. Just one question that I would have. It is concerning the crowdfunding that you mentioned. In what manner does that operate? Is it the same thing as declaring shares for people to buy? At which stage I believe that the business would have to be registered with the stock exchange, or does it take another format for it to operate? Thank you.
Okay, thank you. Thank you for that question. So crowdfunding is not necessarily anything to do with shares. Like we have, or in the UK and in the States, there are some platforms that you can go to and you will put information about your business and the kind of funding you are trying to attract. And then there are people who will go, potential investors will go to that platform and they'll see what you're doing. This is a good place to show your storytelling skills, have a pitch deck, and then you talk about this is what my business is, and this is what I need, but also this is what I'm offering in exchange for the money that you're giving me. So it's not necessarily stocks. I'll give you an example. Some people might be, somebody might be a business that wants to start a production company, for instance, and they put it on a site like, oh, she's escaped me now, but they'll put it on Kickstarter. Perfect, thank you. They put it on Kickstarter. This is what we're trying to do. We look at the movies in Nollywood. We can't stand it. We want to set up our own production company and create amazing films and short films and so on and so forth. But we need the money for it. We need this money to buy the camera. We need this. And in exchange for the money that you give us, we will give you tickets to the premiere of our first of the movie that we do. We will give you signed T-shirts to say that. I'm just giving some examples. I'm just trying to say that it's not always a monetary return. So when you give money, you're actually giving money for the vision that they have, the passion that they have. But let's talk about something like maybe agriculture. for instance, the person might return your investment in other ways that are not money, but it can also be money. So it's not something where you have to be regulated by any financial institution or any stock exchange or any of those things, because the return that you get for the cash that you give is not always monetary. It can be, but not always. So I think for crowdfunding, which is why I said it's still in its very nascent stages in Nigeria, for crowdfunding, people buy into you and buy into what you're trying to do. So they want to support you, and perhaps that's where we could talk more about, because the title is Investors and Support. That might fall more under support than outright investment.
Oh, thank you so much, Mrs. Onifade, for that explanation. So, for example, just to build on from a charity perspective, charity has used crowdfunding campaigns to raise money to support what it is that we do. So we tend not to give people back maybe physical things, but sometimes we will say to you, please support us because we're trying to build a website or we're trying to help students go onto work placements, etc. So that's a really good thing. And actually, I'd never thought that we weren't using it that much in Nigeria and in Ghana and in other African countries. So thank you for highlighting that. And perhaps we can come back to that in having more conversations about that. So Mrs. Onifade, we will call on you. I can do the charity bit and you can maybe talk about some examples of Kickstarter campaigns, etc., that we've had. Thank you. I was going to hand over to Professor Solojo, but it looks as though we're almost out of time. So I just wanted to acknowledge the presence of the Director of the Tech from the University of Ilorin, Professor U.A. Rahim. Thank you so much for joining us. I'm so sorry I haven't given you a chance to speak. Perhaps at the end, those of us who don't have to leave can wait behind and then we can have a bit of a conversation. But now I'd like to hand over to Amobong Asima from Meristem, who will give some remarks on behalf of Meristem, who are huge supporters of us, as is Principium Technology. Amobong is the team lead, wealth advisory and product owner for the Meristem Orientation for Entrepreneurs program. So, Mr. Amobong, are you able to take over, please?
Yes, thank you very much.
Oh, I'm so sorry. I mistook you for a gentleman. I'm so sorry. That will not happen again.
That's fine. That's fine. That's fine. Thank you very much for having us. I will just be quick because we are short of time. I just wanted to quickly speak about Meristem and more by Meristem. Meristem is a financial services group. We have about 7 companies in the group where we provide financial services. We have Meristem Wealth Management, Meristem Stockbrokers Limited, which is probably one of the most popular ones. We have Meristem Registrars, Meristem Capital, Meristem Trustees Limited, and subsidiary where Razak Salah is heading, Meristem Capital Limited, where we provide financial advisory to businesses, to individuals, to startups, and the like. I'll just quickly delve into more by Meristem, which I think quite beneficial to those on this call. More by Meristem is Meristem Orientation for Rising Entrepreneurs. It is a product or a, what do I call it now, that Meristem decided to start comments or to draft because we realized that a lot of young people were not investing. We have a very large youth population in Nigeria, and we could not see that reflecting the amount of young people investing. And then we also thought to ourselves that we had a lot of young entrepreneurs in Nigeria. You can see that from the many Instagram and Facebook businesses that exist in Nigeria. So we felt we would be doing a lot for this population if we could provide education needed for that. So at More, we have 2 pathways. We have the investment pathway and the entrepreneurship pathway, where we educate people about investment. So you have to first of all go through the investment learning, and we educate you about investment, what's about, what to do, and the likes. And then you move to the entrepreneurship pathway, where we then teach you. We have on the entrepreneurship, we have the scale up and the startup, where we teach you how to start your business, what you need to know, and all that, and then as well as the scale up. And More, we also connect you to mentors. Once you've done with the entrepreneurship, we have a partnership with a mentorship platform where we connect you to mentors who also walk you through your entrepreneurship journey and we take you through pitch, we connect you to the best ways to get funding and the like. So it's a very robust platform, and it's completely free. So you could just go on the platform, sign up, and then you take the learnings and you gain as much as you can. So for us at Meristem, we believe that in driving that, will be driving value for the next generation and to build Nigeria as a nation as well. And so thank you very much for having us. We are delighted to be in partnership with you. Thank you very much.
Oh, thank you, Emma. Thank you. I mean, this is like icing on the cake. So we've had Mr. Salawu, we've had Mrs. Onifade, and now Emma's talked to us about something that I believe our young people can really engage with, and we hope to invite you back. So far, we're inviting Mr. Salawu back, we're inviting Mrs. Onifade back, and now, Emma, we're going to be inviting you back as well to tell us a bit more about what it is you're doing. And I'd like to just highlight that the links are in the webinar chat. So please, could you get onto the chat and access the links and share the links with others that you know who can benefit from this amazing program. And so it gives me great pleasure to thank everyone that's made time to join us today. I'm going to hand over to Professor Sola Ojo for closing remarks and to bring our webinar to an end. And next month, we very much look forward to seeing you again. Between now and next month, I'll be checking, please, as a teacher, everybody must take some action on the basis of what we've heard. Thank you so much. Professor Sola Ojo.
Oh, thank you so much, Dr. Irene. It has been a very wonderful session. I thank Mr. Rasak Salau from Meristem. It was a beautiful presentation, and I really, added a lot of value to my business mind. Likewise, the scale-up issues from Mrs. Kuki Onifade. That was a very wonderful presentation. Thank you very much, ma'am. But before I do the proper closing remark, have we recognized Professor Olushola Akande, the Director of the Entrepreneurship Center of Ladoke Akintola University of Technology, who is going to be lead coordinator of HASB for that institution? Professor Olushola Akande is online with us, and I think the network didn't allow her to say something, but she chatted me up that she's back and she's online. We thank everybody. We thank the incoming institutions that are joining HASB. We thank all the participants. Most especially, our thanks goes to the speaker of today. We are going to add you to our speakers forum, and we will definitely want to have you again. Dr. Irene, hello, ma.
Yes, ma'am.
Hello. Can you allow Professor Akande to say something before I close?
Yes, please. Professor Akande, you have the microphone, please.
Good morning. Oh no, good afternoon.
Good afternoon, ma'am.
I'm just happy to be here, though I'm a bit constrained because the network has been fluctuating, and I'm only trying to get myself together to pick most of the speakers speak. However, I'm very happy and delighted to be a part of this program. And I'm sure that with time, I will also be a critical part of the ASBE. Thank you so much, Dr. Irene. I'm really grateful for granting us the opportunity. I've been trying to see if I could ask some questions. Like, I just jotted down something about crowdfunding. I hope I'm still on.
Yes, madam, you still are on.
Yeah. I jotted something down about crowdfunding when Mrs. Onifade was talking. And I mean, it just came to me. I don't know at what point would a business growth require crowdfunding?
Professor Akande, I think we said we are going to have a special time dedicated to crowdfunding, but I would like Mrs. Onifade to please maybe give us a 2-minute answer, if you don't mind, because I think Professor Akande might have missed what you said to us, please.
Okay, I was actually
I'm so sorry about that.
Oh, please don't worry. We all experience network issues all over, so that's absolutely fine, madam.
It's been on and off.
So just a quick one, Professor. Bootstrapping is where you use your own personal funds or funds from family and friends for your business. It is something that entrepreneurs tend to use at the start of their business because they're just starting and they're trying to test their business. So they'll use money from their own savings or from others who want to support them to start their business. At some point, they feel that their business is ready to scale or grow, and they're looking for additional funding. So that's where we talk about these other methods of finding investment or finding money, and crowdfunding is one of them. So your question was that at what point of a business growth is crowdfunding more effective? Can I also say that crowdfunding you can use at different times because it is just a way of raising money. So let me give you an example. If you have a business and it's an existing business, but then you want to bring in a new product or a new service, or you want to develop something in your business, you can utilize the crowdfunding platform to raise additional funds. So there's no specific time. If you just think to yourself that crowdfunding is an opportunity or a place where you can raise additional funds when you need it at any stage of your business. But bootstrapping, we tend to see that at the beginning of a business, and some people don't even get any additional funding for their business and they're still successful. They bootstrap it all the way. Bootstrap just means you're not asking others, like investment companies and so on and so forth, financial organizations, loans. You're not asking them for money. You're finding the money yourself. You can start your business on a small scale and then grow it and grow it and grow it and grow it. So that's the idea of bootstrapping. I'm not sure if that's clear what I've explained there, but we can take this conversation offline and talk some more about it if you would like.
Lovely. Thank you ever so much, Mrs. Onifade. Professor Solaojo, back to you, please.
Thank you very much for the opportunity given to Professor Akande. I appreciate that. So on behalf of the African Support Bureau for Entrepreneurship, and most especially on behalf of the chairman, Professor Peter Oladapo Ajayi, and the secretary to the governing board, Dr. Irene Riverson, and Ms. Aisha Owusu-Banabe, and my humble self, we want to appreciate everyone for attending this season 2, session 7. It was a wonderful session, and I learned a lot. And we are grateful to all our affiliated institutions, starting from University of Ilorin, Frontier University of Osogbo, University of Bill, Cameroon, Obafemi Awolowo University, Ile-Ife, and our latest baby, Ladoke Akintola University of Omosho. We hope that more universities will join us in giving out entrepreneurship education without even, free of charge to people, so that we can mold Africans, we can mold the youth for positive global impact. We are grateful for the partnership granted to us by Meristem. We know that our youth will benefit a lot through us from Meristem. Thank you very much. And for Principium, your ideology is what I like so much. When we met in Nigeria, the last time you came with your husband, and I believe some of our students will also be granted internship and remote work to learn a lot from you. Thank you very much. Our next session will soon be announced. The flyer will be out. And I want to state that by October, God's willing, is going to be our celebrity session. Thank you very much. We are grateful, and we hope to see you again. In University of Ilorin, it is not bye-bye, but see you again. And same with Hasbi. We hope to see more of you. Thank you very, very much. God bless you.
Okay. Thank you and goodbye.
Bye-bye.